Okay, what is up, traders? What's up, tycoons? Super excited for today's video. We got to talk about TLT, right? We're going to take a look at TLT. We're also going to take a look at TNX in this video. We're going to keep things simple, okay? Oftentimes people make things too complicated, and you guys are going to enjoy the simplicity of today's video and just see how when you simply, keep it simple, it makes the market much easier to navigate and look at. So be sure to smash the like button, subscribe to the channel if you guys are new. We can see here on TNX, we had a clear breakout, right? We're trading in this bearish channel, right? And, this right here does give a lot of signs of controlled selling, right? Whenever you see these channels versus capitulations, this is very controlled selling and showing signs of controlled selling. And, we clearly broke the structure today, and it's very possible that the TNX, potentially has we take a look at how much more room it could have go to the upside, maybe another percent, maybe even another 1.44%, or if it wants to retest its highs, this thing could have another 2.15% to the upside. We'll have to see if that's going to happen. This very well could be a false breakout, right? Simply, otherwise known as a look above and fail, right? So, if we do pull back, you would expect the yields to bounce off of this, this former structure that they have and climb to the upside. But if they don't and they actually come back within this range, that's going to be a bearish signal. It's going to be a look above and fail. And it's going to indicate that yields are going to go lower, and that's going to drive things like TLT up. Again, focusing on the theme of keeping things simple, right? We have a very simple bearish channel right here, right? Respecting the lows, bouncing off of the lows, respecting the highs, rejecting the highs, and then ultimately breaking out today and gapping up over the Labor Day weekend, first day that we have back in the market. When we take a look at TLT, what do we see on TLT, right? Well, TLT has actually had this rising wedge here for a minute. And again, just not trying to overcomplicate things. We're just looking at some simple chart patterns here, right? We're seeing, we're making these higher highs, but the slope of these trend lines here is indicating that we've got a rising wedge. And you can see that we clearly broke through that trend line on Friday, right? And today we got further continuation to the downside, coming back to old resistance, right? And old demand. We take a look, and what do we see? Resistance over here on these two candles. We see resistance here on these two candles. So old resistance becomes new support, right? And that's how it works. And we can see that those resistance levels flip to support over here. And then we came through and we are trying to test those levels as support again now, currently at the moment. That's about 93.59 and 93.9. Those are the key levels that TLT is trading through currently at the moment. Now, we could see a rebound, and that could be, a rebound to get continuation to the downside. Often corrections come in the form of an ABC, which is going to be a three-wave structure. So in a sense, it would be an A, B, and then C down, targeting, some of the previous lows that we've had, right? You can see that this level right here, 92.36, is a strong area of support on TLT. We've got multiple candles touching it here. If we actually go out to a daily time frame, and get rid of some of these drawings on the chart real quick, you can see where these levels are from, right? These levels are from the October lows, right? We have, basically the close of that candlestick, and then we have the low of that candlestick. This is the low for TLT. And if we take a look at, where we're at currently, let's go back to a 4-hour chart actually to do so. Well, before we do that, I want to just show you guys, it's still a long ways down to go from here. So, it's not a guarantee that we're going to drop. If we come back to retest the October lows, that's almost another 2% drop, a drop of 1.85%. But, we've got to pay attention to yields, basically, right? I mean, if yields continue to rise and they potentially retest their highs again, the likelihood that they break through those highs and invalidate the double top that's trying to form becomes, a stronger possibility. And that's something that could drive TLT, down another 1.3%, another 1.85% or more. We won't know, for certain into the future. If we take a look at our RSI, right, initially we had this bullish divergence forming here. So if we take a look, right, we have these lows here, we have these higher lows. I'll go ahead and make that a little bit clearer for you guys, but we have lows here, we have lower lows, and then on the RSI, we have lows, we have higher lows right here. So this is a simple term known as bullish divergence. And what do you see? You see TLT shot up, very nicely afterwards. But there's still room to go, okay? basically is what I'm getting at right here. There's still room to the downside. If we were to make our RSI a little bit bigger here, a little more clear for you guys. Okay, you can see that, we basically can come back down into oversold territory to retest this initial bullish divergence trend line. And that would coincide with most likely it coming down to retest some of these support levels. Oftentimes with these rising wedges, they're going to, come back to the origination of the pattern, which again is going to bring you towards that 92.36 level. If we take a look at some of the warning signs to pay attention of, we'll highlight our MACD right here. Okay, so we have our MACD very close to getting a bearish crossover at the moment. We don't have a bearish crossover, but oftentimes on the daily chart, these crossovers for the MACD, whether it's bullish or bearish, are really good buying and selling signals, right? If you take a look here, once we got the bullish crossover here, TLT had a nice continuation to the upside, and that was a nice trading opportunity. So the big question is, if we end up getting a MACD crossover to the downside sometime over here, is that going to be a trading opportunity to the downside? It's been a really valuable and a really useful indicator, just simply looking at that daily MACD. When we take a look at our momentum indicator, okay, and we have our momentum SMA here, oftentimes this can be a little bit early or a little bit late, but it's a good idea just to keep track of the momentum. You see here we have the momentum shift, and then 4 trading days later is really once we start to actually get that positive momentum in the price action of TLT. Just like on the daily MACD, we need to be cautious of a crossover to the downside here, right? It's just barely above 0 right here, so it's potentially about to head into negative momentum territory. And if it crosses below this momentum SMA in this negative momentum territory, then that's going to be a bad look for TLT. I've highlighted before in previous videos the gap down that we have to fill. Okay, these gaps, they tend to fill about 90% of the time. There's a gap in between this candlestick and this candlestick. If we were to extend this to the right, you can see that we're pretty much almost done filling this gap. There's a very small, room left to the bottom. These gaps often act as support or resistance sometimes as well. So it's very possible that, right along here, towards the bottom of the gap, right around 93.29, 93.25 in that area, it's very possible we could end up finding support. But we need to be cautious of that corrective pattern that I spoke of, the 3-wave structure with the A, B, and then C down. That's something that you want to pay attention to. Now, it's not all doom and gloom. Okay, again, we're just trying to focus on keeping it simple in today's video. If we were to take a look, right, we talked about the gap down. Now we have a gap up to fill, and we have 2 gaps up to fill just from the last few trading days, right? There's actually more gaps up to fill. And, again, these gaps, they tend to fill about 90% of the time. So, they're setting up for good opportunities, when these gaps are going to fill. The big question is when are the gaps going to fill? Not so much if they're going to fill. Again, if we just go to our 4-hour chart here, all right, and we take a look at things, very simply, we had a rising wedge on TLT on our 4-hour chart. We take a look at the 10-year treasury yield and take a look at TNX, right? What did we see? Well, we can see, that we've basically had, this extended move to the upside, right? We've had this very strong rally, and, each time that we've gotten this controlled selling structure here, like you can see, we have some nice controlled selling here, all right, as well. And then we get a breakout to the upside, and we get that upside continuation. We're seeing something very similar, right here as well. We have this controlled selling, and then boom, we're getting a breakout to the upside. So we need to be cautious of, treasury yields. If treasury yields continue to rise, of course, that's going to result in things like TLT dropping. There's no guarantees, but, what we can do is just look to identify some of the structures, try to keep things simple, maybe look at some of the simple indicators we use, whether you use the RSI, whether you use the MACD, whether you look at things like momentum, or maybe you use all of them. These are just some of the things that you want to look at, and try not to overcomplicate it. Try not to let your emotions, your feelings get in the way. And just look, right, and trade the chart in front of you, not the chart that you want to see. A lot of people, they maybe want to see this continue to go lower here, and that's not what they got, right? They're looking at this and they're saying, hey, we're trading in this bearish channel, things are going to keep getting lower, we're going to reject right here. And today you can see we gapped up above that channel, and definitely saw some pain in the bond market, right? If you're going long on treasury bond ETFs or treasuries, you're feeling the pain right now. And, I just want to let you guys know I'm there with you. I am long on a long-term basis standpoint. To me, we haven't really seen treasury yields this high. And so that makes bonds very attractive, in my opinion, at the moment, being that we are seeing, yields at historic rates that we really haven't seen. We've really broken like a 2-decade downtrend in treasury yields, and it hasn't made much sense to be looking to invest in bonds. But now, with attractive yields, it is, as I mentioned, attractive. So, I did have a small hedge on TLT, mostly because of this 4-hour pattern that I saw forming. Right. And that position actually did do pretty nicely. Of course, in hindsight, I wish I would have grabbed a much larger hedge position. But at the end of the day, you don't want to be rooting for your hedge, and you're not rooting for your hedge. And, because then you're basically just switching your stance. Right. So, if you have a long position and, I started getting long in TLT, once it broke down below 95, I got into it in the 94, 93, 92, 92s. We had a nice little rally. It makes sense to hedge it. It ran up pretty fast. Right. We talk about, some things on this channel a lot, known as divergences. We talked about bullish divergence here. We have a high and a higher high. On the RSI, we have a high, we have a lower high. So this is a bearish divergence when price is going higher and the RSI is going lower. It's an indicator you may see some bearish activity. You combine that with the rising wedge, which is a bearish chart pattern, and that saw a very significant drop in TLT that ended up playing out. Hopefully you guys are able to navigate this market. I know it's been very tough. Really, basically the past 2 years, right? 2022 was a brutal bear market for a lot of people. They got burned. And 2023, a lot of people weren't able to shift towards the new sentiment and have gotten burned there as well. So, try to keep things simple moving forward. All right. Focus on the charts in front of you, not the charts that you want to see. And with that being said, I'll see you in the next video.